I'm Ryan Letford-Brown of FundCalibre. We're joined today by Graham McCraw of the elite-rated Standard Life Global Smaller Companies Fund. Thank you for joining us.
Thanks, Ryan.
Global small cap is not a particularly well-known space to the UK investors. What does the universe cover?
Global Smaller Companies, as defined by MSCI, is the bottom 15% weighted average market cap of 23 developed and 23 developing countries. So the bottom 15% of 46 countries globally. Now that accounts for over 6,000 companies. Compare that to the MSCI ACWI index, which most global equity managers focus on. That's around 2,500 companies. So it's around 70% of the world's listed companies. So a huge opportunity set for global investors like ourselves. And that bottom 15% means different things in different parts of the world. So in the UK, that's all the way up to around the top of the FTSE 250. In the US, it's any stock under $15 billion. So these can quite often be quite reasonable companies from a UK investor perspective. So again, the perception with small cap is potentially high risk startup businesses. On a global basis, it isn't often that, with the average market cap of companies in our fund around £4 billion. So quite sizable companies.
And people do often associate small cap with higher risk. Do you agree with that, or do you not see it like that?
Yeah, so on a volatility basis at an index level, smaller companies have been higher risk than the larger peers, but we think active management can offer significant benefits from a risk perspective. So we invest in high quality companies that have a clear and defendable competitive advantage, and we think that focus on quality really helps to reduce risk for investors.
What are the main attractions in the smaller companies for investors?
We think there are a range of potential attractions, but probably the three main ones would be outperformance, lowering of risk, and diversification. So at an index level, global smaller companies have significantly outperformed the larger peers since inception of the small cap index in 2000. And again, we think active management can add benefits for our clients. And as we've shown with our fund, we've added significant alpha over and above that small cap index. From a risk perspective, again, that focus on quality companies, we think we can lower that risk by only investing in the highest quality companies. 17% of the global small cap index is loss making. We never invest in loss making companies. So straight away that helps to focus our efforts on the higher quality companies. And then the final, and for me the most important aspect of this fund is diversification. This is something genuinely different, we believe, in what's quite a crowded global equity space. It's 50 to 60 stocks that have the quality, growth and momentum characteristics that we're looking for. And the result of that is a return profile that is quite different from large cap equity. So for clients that might only invest in global large cap equity, we think this is a nice complement to that current holder.
Graham, that's really useful. Thank you very much for coming in. For more information on the fund, please visit fundcalibre.com.